Good afternoon. The Committee of the Whole is called to order. My colleagues, materials for the Committee of the Whole are in shared session Google Drive folder label 8.9.22. Committee of the Whole. Proposed amendments must be submitted in writing to the clerk via email to 36glsession@gmail.com. My colleagues, the rules of engagement. There'll be 2 rounds for discussion on Chapter 1 relative to the adoption of revenues with the panelists. We will have 2 rounds of questions for the panel, with each senator allotted 10 minutes for questions, not including responses. Please be reminded, if you yield your time, only one person can yield their time to any of our colleagues here. Once that is yielded, all that time is gone and is given to the person that's allowed to speak. After completion of the 2 rounds of questions, panelists will be excused. A reminder that amendments will not be entertained until after the panel is dismissed. On the 3rd round is for amendments or comments to speak on the chapter or the bill, or the chapter to the bill. Amendments not submitted in writing to the clerk and uploaded to the Google Drive folder prior to the start of that chapter or section will be called out of order. Reminder, if your amendments are not submitted before we start that chapter, it will not be entertained. So please be mindful of what amendments you're looking at so we can entertain them. Okay? Only amendments received before the start of the chapter or section will be addressed in the order it is received. Chairman I will ask if there are any questions or comments on the section or chapter, and if none, we will declare the section or chapter is completed. I will gavel down and we will move from there. If a request is made to bookmark a part of the bill, the bookmark section will only be entertained up to the end of that chapter, and it is the responsibility of the requesting senator to ensure the bookmark is addressed. Should the discussion or amendments of that chapter be completed, the bookmark is then retired with or without being addressed by my colleagues. I will continuously remind you of a bookmark before we get to the end of the chapter. Basically, I won't throw anybody under the bus. I'll keep reminding you we do have a bookmark. Be mindful, my colleagues, whoever bookmark it, be ready to address it. Senators who wish to increase an appropriation to an agency or department must identify the funding source and provide an explanation of the impact for both the receiving agency and the defunded agency. So if you want to, I think that's very simple. If you want to increase an appropriation to an agency or department, identify the funding source and provide an explanation of the impact. After we complete the discussion on the bill, I will be allowed to close, and I will entertain a motion for the recommendation of the Committee of the Whole, followed by a motion to rise from the Committee of the Whole, at which time I will report out the bill as recommended by the Committee of the Whole. With that, I will now ask the Sergeant-at-Arms to swear in the panel, and I will introduce them after they're sworn in.
Please raise your right hand. Under penalty of perjury, you will affirm that any and all information you provide today, whether it be verbally, electronically, and in writing, be the truth, the whole truth, and nothing but the truth, so help you God. Okay, Mr. Chair, on the rows. You may proceed.
Thank you. We currently have on the panel Ms. Daphne Shimzu from the Department of Revenue and Taxation, Mr. Edward Byrne from the Department of Administration, and Mr. Lester Carlson from the Bureau of Budget and Management Research. All 3 are directors of their respective agency. We have, to my immediate left, your right, would be the Director of the Office of Finance and Budget and the Chief Budget Analyst. I think that's the correct title, right? Llewellyn Terlai. So at this point, we'll begin questions for the panel.
Mr. Chair, I got a point of
Yes,
inquiry. Normally in the past, we've had an introduction from BBMR and the fiscal team and Office of Finance and Budget to see if there's harmony between the projections. And since we're going to be in that chapter in the beginning, could we get that analysis, please?
Yes, I agree with you. Thank you for recognizing that.
Mr. Chair,
Senator Tidy.
Thank you, Mr. Chair. Mr. Chair, you know, to meet the statutory notice requirements, of the 5-day rule, I ask that I make a motion that we recess until Monday to allow the public the ability to look at the bill that has just been posted online just yesterday. I mean, we try to meet that requirement for every other agency, and it allows the public that opportunity to review it, and since it's been only posted yesterday, so I make a motion that we recess until Monday to allow the public that 5-day rule.
And that's the motion, correct?
Yes, sir.
Okay, I will ask that if there's anyone that would like to speak on the motion before I ask for the vote on the motion. Does anyone else like to speak on that motion?
Sir, point of inquiry, sir. I think
Madam
on the
Vice-
motion made to recess is not debatable, so you got to call for the vote. I don't think it's debatable, sir. Just,
Okay, we'll call for the vote. All in favor of the motion to recess until Monday, please raise your hand. Recess till Monday. Okay? We have 3 votes. Motion fails. We will now continue. I will now ask, as requested by our colleague, Senator Chris Duenas, that would have BBMR Director Carlson and Director of Office of Finance Budget to please make the comment. So, okay, okay, you let him start. Okay, so far they're in agreement, but I'm going to have them go ahead and say it out loud so it's on record. Right, Senator Duenas?
Are they going to present this, Mr. Chair? This is an OFB.
Yes, this
Overview.
will be OFBs.
Yeah.
Okay, but Mr. Carlson will be the first one to speak about the budget and exactly what Senator Duenas was requested for. We want to find out if there's harmony in this budget.
Yeah, Mr. Chair, just to follow on to my point of inquiry and why I wanted to go down this road, I think also for the public who would be watching, the way we did this last time is put up the PowerPoint so that if it's going to be OFB to deliver the information contained in the summary, maybe we're just going to get from the fiscal team ditto, and then we would have completed that, and then unless they do have a discrepancy, I'm sure, in which but this is really an exercise so that the listening public and those watching will see our presentation to understand and then to see whether or not there's any differences between the two.
All right. Okay, I'll have Mr. Guerrero first start out. And clerks, do we have this on the drive where we can put it on the screen so that the people of Guam can view this live? If we can have it on the screen, yes. Okay, Mr. Guerrero?
Thank you, Mr. Chairman. Thank you again, Senator Duenas, for that reminder of how to begin this budget session. I am absolutely confident, in the budget that we submitted. It's a very workable document. I think the revenues reflected within the document are very much achievable. And from preliminary, information that I received, it's been well received. And with that, I would just like to maybe call your attention to the PowerPoint that we put together regarding the upcoming FY23 budget. But if I may, I wrote up something myself, so to give you some at least background on how we came about coming up with the revenue. So if I quickly can just read it for you folks, I think would be, kind of like appease everybody and let them know where we're coming from. Okay? I'll just go down and sign this. Good afternoon, Madam Speaker, Chairperson of the Committee on General Government Operation, Appropriation, Housing, Senators, and panel colleagues. My name is Steve Guerrero. I am the Director of Office of Finance and Budget. I and the OFB staff are here today to present Bill 27636 COR as amended by the Committee on General Government Operations, Appropriation, and Housing, referred to as FY23 Budget Bill. I would like to start out with the FY23 projected revenues and how it was formulated and derived. Traditionally, the method used to determine government revenues involved using historical data, current trends, tracking of monthly revenues, and economic conditions, and other pertinent indicators. Projected levels for each revenue categories may include some or all of the methods mentioned. Adjustments are made to revenue categories to account for anomalies and non-recurring events not normally included in projecting annual government revenues. Methods used to project the FY23 revenues were a combination of some of the methods and consideration of other economic factors such as tourism, federally funded existing contracts and projects, and current regional events. Since the beginning of FY 2022, revenue collections in the general fund major categories have exceeded projected revenues for the first 9 months of fiscal year. Continuing these trends, year-end projection will have the general fund collecting exceeding FY 22 revenue projection at this point by $99.5 million. Based on the June 2022 CRER report, revenues for income tax were tracking above adopted revenues. Individual income was at 29.1 million, corporate income was at 3.5 million, and withholding taxes at 12.4 million, which reflects a total increase of about 45 million in income tax collection over the FY22 adopted revenues. Revenues collection in business privilege tax also reflects an increase of 56.4 million over the FY22 adopted levels. These four categories represent approximately 87.6% of the total general fund revenues. The remaining 12.4% is shared by revenues received from Section 30 at about 10.8% and 1.6% from other revenue sources. Unfortunately, the same cannot be said for many of the special funds revenues. Of the 6 major special fund revenues, 5 are currently tracking below projected revenue collections with a combined projected shortfall of about 8.2 million by the end of the year. Therefore, these funds have been adjusted, however, these funds have been adjusted accordingly for FY23 with the exception of the Tourist Attraction Fund. The recent increase in tourist activities is anticipated to continue into FY23, allowing for more positive outlook in collections for the Tourist Attraction Fund. In FY22, the only major funding tracking above adopted revenues levels was the Guam Educational Facility Fund at 1.3 million, which was factored into the projection of FY23. While there is no doubt that the receipt of the Coronavirus AIDS Relief and Economic Security Act, CARES funds, American Rescue Plan, ARP funds, the Coronavirus State Fiscal Recovery Fund, and the Coronavirus Local Recovery Fund continue military projects and other pandemic federal assistance fund has helped mitigate revenue losses in both the private and government coffers. The expiration of these federal assistance funds will have a financial impact on the local economy and government revenues. However, as these conditions do present themselves, the government has made financial advancements over the past 2.5 years since the start of the pandemic to achieve financial stability. Revenue projections for FY23, I believe, are conservative based on part of historical revenue trends, current economic conditions, tourism industries, financial impact of COVID-19, and economic assumptions. A detailed presentation of the FY22 revenue projections will be presented in the PowerPoint presented shortly. I and the Office of Finance and Budget staff are available to answer any questions you may have regarding Bill 27636 as submitted by the committee. I thank you.
All right, Mr. Guerrero, you can go ahead and continue now with your PowerPoint.
Okay. The first slide there, of course, it just represents the revenue summary. All right, this is just a compilation of what the total FY23 budget consists of and how it's broken down. The general fund revenues available for appropriation is about $713,256,152. That represents 69.8% of the total revenues. Special fund revenues comprise of $199,594,151, which that represents 19.5% of the total revenues. For federal matching grants and aids, that amounts to $109,468,286, which comprises about 10.7% of the total revenues. Total revenues that we are projected in the budget is $1,222,318,589. Okay. Next slide, please. Okay. I'm not too sure if you can see the slide from where you are, but what the slide depicts basically is just the categories, revenue categories, and a comparison between the actual adopted revenues for FY22, what was requested in the executive budget, and what is being recommended by OFB in Bill 276. We'll start out with the income taxes. Total income tax for FY22, and I'll break it down by categories to make it a little bit easier. The FY22 revenue, adopted revenues for individual income tax is about $71.2 million. If you recall also that not just recently, there was an amendment to the FY22 Budget Act. And I'll go ahead and include those numbers, but I think for comparison purposes, when we look at the budgets, we normally take what was adopted, what was passed, and versus what is being presented. That way we can take like apples and apples, comparing it. So on the amended budget, actually it kind of grew up about $4 million. That now has an adjusted level of $75.6 million. The executive budget is requested has a total of $78.6 million. OFB's recommendation right now, based on what we are tracking, is $93.5. For corporate income tax, the authorized level for FY22 is $73.9 million. Yeah, the amended, as authorized in Public Law 36106, kept that status quo at $73.9 million. The executive budget has a level of $95.2 million, and the OFB recommended level is $85.7 million. For withholding interest and penalties, the FY22 authorized level is $335.4 million. In the authorized amended version of Public Law 36106, increased it up to about $237.5 million. The executive budget is requesting $243.5 million, and OFB is coming in at the same level of $243.5 million. Going down to business privilege tax for FY22, authorized is $238.9 million. The amended Public Law 36106 amended it up to $290.5 million. The executive budget request is requesting a level of $302 million, and OFB also concurs with that level of $302 million. The other taxes are basically just status quo across the board. OFB's recommendation compared to the executive budget is slightly about $600,000 less. But basically, we're kind of like seeing eye to eye on that. Moving down to federal sources, the federal income tax, which is known as Section 30, for FY22 level, it's at 76.1. The authorized level in Public Law 3606 did not change that. It's still at 76.1. The executive budget has a slight decrease down to about 74.9, and OFB also concurs with that level at $74.9 million. Immigration fees between what was authorized in FY22 and what the executive budget and OFB is recommending is slightly about $500,000 less. Use of money and property is where we saw maybe for the amount of revenues collected in this particular category saw a significant drop. The actual authorized level in FY22 is about 428,000. It did not change in the amended budget. The executive budget is showing a decrease to a level of 197,000, and OFB also agrees to the level of 197,000. License and permits, that's basically just almost kind of status quo. We just have a slight difference of about maybe $9,000, $10,000 between FY22 and what both what's showing in the executive budget and what is being recommended by OFB. Fees and licenses, again, it's almost status quo with the exception of maybe about $100,000 decrease in both FY22, between the FY22 authorized and what OFB, what the executive budget and OFB is recommending. And all the other categories are kind of minute. Their collections are below $1 million, and although it does play into the funding for departments and agencies, I think for our revenue purposes, you know, it's the differences is very minor to the bottom line. So total, if you look at the FY22 authorized level, the total authorized level for the general fund for appropriation was $623.6 million. The recommended adjusted level in Public Law 36-106 brings it up to $678.5 million. The executive budget is requesting a general fund level of $695.8 million, and OFB's recommendation is $713.3 million. That's it. Next slide. Okay, what this slide shows basically is the subsidy and how we came about with the proposed or the authorized provision for tax refunds. In the current budget in FY22, the provision of tax refunds is set at almost $68 million. It did not change in the amended budget, in the amended Public Law 36-106, but on the executive request, they put aside $90 million. On the OFB level, we brought that down to about $62.8 million. The Pharmaceutical Funds, again for FY22, and just before we start, the Pharmaceutical Funds is based basically in a percentage that you charge against the business privilege tax, which calculates about 6.19%. That automatically goes to the Pharmaceutical Fund. So the Pharmaceutical Fund, I think for FY22, as authorized, is 14.8. The amended budget, because we increased the business privilege tax, went up slightly to 17.9, almost 18 million. In the executive request, based on their business privilege tax, has the Pharmaceutical Fund at 18.7 million, and we also concur having the same business privilege tax level at 18.7 million. Then we have things that we need to set aside by law, which is which we take off the top every year on the revenue side, is the Harmon Industrial Roadway Parkway project of 175 million. That is taken off across the top. And also the Better Public Service Fund of 350,762,000. That is also set aside. So the total subsidies, if you include the provision for tax refunds and everything, comes out for FY22 as authorized is 83.3 million. For the authorized level, based on 36-106, is slightly up at 86.5 million. The governor's request and the executive budget is 109 million, and the OFB set aside, amount for the subsidies is 82.1. Next slide, please. This slide basically just gives you an allocation by percentage and dollar amount of how the revenues are divvied up across the board through the various government entities. We started with public education, which takes the bulk of the pie at 37%, totaling $265.8 million. Next is protection of life and property at 18%, totaling $126.1 million. General government operations takes 14% at approximately 103 million. Reserves comes in at 12%. Its total is about $85 million. We have the debt service that we need to set aside, constituting about 9% of the total revenues. It amounts to $62 million. We got public health coming in at 8% at $55.5 million. Individual and collective rights taking about a percentage of $5.7 million. Economic development also about 1% at 5.5. Recreation taking less than 1% of the total pie at 3.4%. And community service, again, less than 1% at $1 million. Next slide, please. Okay. The categories for reserve that we normally see in the budget is we categorize it as reserves. It's not normally part of the governor's requests. These areas include the Estulan Guam, the Legislature, Office of Finance and Budget, Unified Judiciary Guam, Public Defender Service Corporation, the Mayor's Council, Office of Public Accountability, Office of the Attorney General, Guam Visitors Bureau, Guam Election Commission, Guam Board of Accountancy, and two new ones that we just added on this year, which is the Chamorro Land Trust Commission and the Guam Ancestral Land Commission. Next slide, please. Okay. Now, this is a summary, basically, of all the special funds that we are that you have here that we compared from the FY22 authorized, the amended, based on what the executive budget's reflecting, and OFB's recommendation. So if you could just kind of let's go across the columns or the rows, you'll see that there's not much of a difference. Basically, everything's kind of consistent. You see on the Healthy Future Fund, right now, what is authorized? You have a total of 42.8. It did not change in the amended law. The executive budget has it at 40.1, and OFB also concurs with that reduction. Guam Education Facility Fund, as authorized, is 34.6. Did not change in the amended law. The executive budget has it slightly increasing, about $100,000 at 34.7. OFB, our recommendation is $35.8 million. The Guam Highway Fund was authorized as 20.6, hasn't changed in the amended law. The governor's request is slightly below, about $1 million at 19.5. OFB's recommendation is $18 million. Solid waste, authorized level for FY22 is 18.6. That did not change in amended law. The executive budget requesting is 18.4, which is about a 200-some thousand reduction. OFB also concurs with that same level. The Guam Pharmaceutical Fund, again, these amounts are predicated based on the BBT that's estimated to be projected for the year. So those are the amounts that we see for FY22 is about 14.8. The amended law increased it up to 17, almost 18 million. The executive request has it at 18.7, and OFB again concurs with that level. The tourist attraction, what is authorized in the 22 law is 15.8. The amended law did not change it. The executive request has a decrease of about maybe $2.1 million. OFB recommendation is $16.1 million. Custom and quarantine, FY22, $2.7 million as authorized. No change in the amended law. Executive budget has a slight decrease of about $700,000. We concur with that level. And all other categories, which breaks it down to various different special funds, comes out to what's authorized is almost 36 million. The amended law did not change it. The executive request has it slightly below about $4 million, $3.8 million at 34.5 million. OOP's recommendation for this category is about 37.8 million. So the total, as authorized in FY22, is 198.5 million. What was amended in the law brought it up to 201.7. The executive budget shows it at 194.2, and OFB's recommendation is $199.6 million. Next slide, please. Okay. This slide also represents, or just kind of breaks down how the allocation for the special funds are made. Real quickly, for the general government, it takes up about 29% of all special funds, coming in at 58.2. Public health takes up about 26% at 51.1. Public education comes in at 19% at 38.6. Protection of life and property comes in at 9% at 17.6. The reserve comes in at 8% at 16.3. Debt service comes in at 4% at 8.7 million. Community service at 3% at 5 million. Individual and collective rights takes up about a percentage of 2.7 million. Economic development less than 1% at 780,000, and recreation again below 1% at $445,000. Next slide, please. And that basically is our presentation in a nutshell of how we came about with our revenue levels for FY23.
All right, thank you, Mr. Guerrero. Now I ask Mr. Carlson for his comment and presentation, if any. Sir.
Thank you, Mr. Chairman. Thank you, Mr. Guerrero. A couple of observations. Number one, the executive budget request was submitted in January, the end of January of this year. A lot of things have changed positively, and some of that is reflected not only in the recent Public Law 36106, but also in the Substitute Bill 276, which we are in agreement with. Over the passage of time, there has been some upward movement in some of the revenue categories. The last official document that you guys received was the June CRER. I have a back of the napkin estimate from the first week of August that basically substantiates OFB's general fund revenue levels across the board. We can begin by stating that the individual tax category in our revised forecast is consistent with the OFB level. The corporate tax is within the ballpark that we're looking at, even though it is reduced, but we agree with that number. We are in lockstep with withholding, and I thank you very much for that, because that was a point of concern last budget session, where we were off on general fund revenues to a significant degree. So I am very happy that we're starting off the discussions on the same page. And I'm here on behalf of the governor and the fiscal team to be able to provide the body with some level of comfort that we also see that these revenue levels are both derived from collections, some historical, and we've also done our own homework, and in a couple of very obvious categories, very critical ones, with withholding and BPT, we're coming up with the same numbers. I'm very heartened to see that. I will tell the body that with respect to Section 30, we did get some correspondence recently from the Treasury, Department of Interior rather, that we have no more liability for war claims. We have provided about $39 million towards that endeavor, and we have been given assurances that the monies that we have provided to date are sufficient for the war claims settlement, and we anticipate that will not be deducted from our Section 30 revenues moving forward. We got a request from the Department of Interior to submit a recommended Section 30 level by August 4th. We did meet that deadline, and we asked for $81 million. So this number here, we will see, it should be if we get something before the budget is adopted, we'll certainly let you guys know, but bear in mind that we did ask for more than what it is that's shown here, and the good news is that the war claims is been satisfied. Use of money and property, we do agree. We're in agreement with the fees, license and permits amount, similarly with the department charges. And there's a, when you go down to the bottom and you see the general fund available for appropriation and that difference, which is about $18 million, there are obvious increases in the subtotals for gross revenues of 804 from the executive budget request and 809 for the OFB level that basically bear the brunt of that, plus the subsidies amounts that come into play. And then when you debit and credit, including the fact that the executive budget request did not have a 2% reserve request, and that is funded in this budget. And I am very happy that in the deliberations for Bill 325, that the body decided to go ahead and fund $28 million worth of reserves. The current year reserve of 13 plus the $15 million in addition. So we have $28 million that are in current reserves. The trend with the body and the recommendation from OFB to continue putting aside reserves, adding another 14 will just bring that number up cumulatively to $42 million. And that is a wonderful thing to have. We have not had cash reserves in a long time. And we're at a point where we can actually do that. Yes, ma'am?
Can you please repeat that, what the current balance is? You said it's 28 currently?
Yes, by virtue of what you guys passed, you put in the $13 million that was not funded in 22, and then you did another 15. So that's $28 million. That's cash funded. Thank you very much. So you're adding to that. You're being very responsible, and I'm very pleased with that, because that was a product of this collective body's decision making. So it was a good call, very good call. Thank you. So for the page 3, I believe it is, that we have in summary, we are in agreement. I've given you some color on the war claims, and that might just, if it comes in quick, then fine. If it doesn't, then the amount is sufficient. For page 4, when Mr. Guerrero went over the subsidies, again, we're starting out at a higher level of income tax refunds at 175 million. There's been some collaboration between Mr. Guerrero and Mrs. Shimizu with respect to the EITC amounts, the child tax credit receipts, and the additional child tax credit receipts, to the point to where we are in agreement with the net going from $90 million in the executive budget request down to $62 million because of the implementation of the federal funding that we're going to be the recipients of moving forward, particularly with EITC. As Mr. Guerrero said, the Pharmaceutical Fund is a function of math with respect to the adopted level for BPT, so that's okay. And the bottom line numbers, we're okay with, because when you look at the difference between what we ask for in income tax refunds and what the revised level is, that takes up the majority of the difference in the subsidy amounts, and we're fine with that. Mr. Guerrero did a nice job of being able on page 5 to show the allocations. I initially was looking at the debt service, and you look on page 9 of the bill, and the debt service total is $70 million. There's a $62 million amount here, under debt service and general fund. But if you go to the special fund, there lies the other $8 million. So the cumulative amount for debt service is consistent with page 9, where it's 70.8 million. It just is broken out appropriately between general fund and special funds. So we're fine with that, and we agree that that's the proper way to account for it. The reserves that he has here speak for themselves, and the special fund summary on page 7. Again, there's collaboration and agreement on the Healthy Future Fund. There's a slight increase in the GEFF, which is okay. The Guam Highway Fund, the $19.5 million request from the governor is now $18 million. That's a function of the rollback of the tax on gas and diesel that was part and parcel of Bill 325. So of course we understand that level is going to have to be adjusted downwards, and we're in agreement with that adjustment. Solid waste, we're in agreement. The Pharmaceutical Fund, again, is just a function of BPT, so of course we're in agreement. There is an increase in the TAF. Again, the executive budget request was submitted January 31st, so there's been a lot of positive movement on the tourist front. So it is only appropriate that there be a adjustment upwards in TAF. School lunch reimbursement has been $12.5 million since, I think, the clock was invented. So it's been there for a long time. Customs and quarantine, that's still a work in progress. So again, the reduced amount of, basically $700,000. We're okay with we're okay with that if arrivals pick up and the fees that are paid for people to come in have a positive effect. Then I'm sure that that can resolve itself if the body decides to provide language that the customs of quarantine is adopted at $2,067,000, but they can spend up to the level that they actually receive, which the body does for a number of revolving funds. They give those funds that latitude, and if that adjustment is made, then that takes care of itself. So with the cumulative totals, the difference between 194 and 199 can really be summarized in just two areas: increase in tourist attraction fund, which is self-evident, and in the others category. So with the summary of the special funds, we're fine. And again, on page 8, there's the other part of the debt service that dovetails with the general fund, thus resulting in $70 million cumulatively for debt service. I think we are off to a very, very good start, and I am here to support OFB and the bill. We see no reason for any discomfort in adopting of the revenue levels that are contained in the substitute bill. We see them as being well thought out and thoroughly achievable. Thank you, Mr. Chair.
Mr. Chair.
Thank you. Mr. Carlson.
Can they elaborate on the others? The others?
Which others specifically?
It
What
says
page?
others on page 7.
Oh, okay. You want Mr. Guerrero or Mr. Carlson?
That's his bill.
Okay. Can you break it down what it is? Break it down there. Mr. Guerrero will break it down, and then if you want comment from Mr. Carlson, who's in,
Yeah, I
We'll
think
ask
that'd
him.
just be helpful for the body to get a breakdown, a detailed breakdown on that.
okay. Llewellyn, do you have that breakdown? You can state it?
Yes, I can.
Yes, the others would, is just the other special funds, like the Banking Insurance Enforcement Fund, Better Public Service Fund, Chamorro Land Trust Fund, Chamorro Land Trust Survey and Infrastructure Fund, Contractors License Fund, Corrections Revolving Fund, DPHS Sanitary Inspection Fund, Enhanced 911 Emergency Reporting System Fund, Environmental Health Fund, the Flame Fund, Guam Ancestral Lands Commission Survey Infrastructure and Development Fund, Guam Board of Accountancy, Guam Environmental Trust Fund, Guam Invasive Species Inspection Fee Fund, Guam Museum Fund, Guam Plant Inspection and Permit Fund, Health Professional Licensing Office Revolving Fund, Host Community Fund, Indirect Cost Fund, Land Survey Revolving Fund, Manpower Development Fund, Mental Health and Substance Abuse Services Fund, Office of Vital Statistics Revolving Fund, Police Patrol Vehicle and Equipment Revolving Fund, Police Services Fund, Professional Engineers, Architects and Land Surveyors Board Fund, Public Recreation Fund, Public School Library Resources Fund, Public Transit Fund, Rabies Prevention Fund, Recycling Revolving Fund, Safe Streets Fund, Street Light Fund, Tax Collection Enhancement Fund, and Water Research and Development Fund.
I hope that suffices that answer, that question.
No, I was wondering,
Now, I asked Mr. Carlson now to comment also.
yeah, so the
On that.
the executive is lower than the OFB, that part, and then and OFB is higher than FY22.
Right, okay, Mr. Carlson, I'll respond to that.
Thank you, Mr. Chair. For the body's information, on page 3, you have special revenue fund amounts that ends on page 5, and the amount is $199,594, which is $199,594. So the pages 3, 4, and 5, as Mr. Lahi went through, cumulatively add up to the $199,594,000. There are the 1, 2, 3, 4, 5, 6, the big 6 that you see in the special fund report. But there are a number of other special funds that cumulatively come out to the $199 million number. So I believe that that was captured accurately. And the OFB presentation and the bill are one and the same with respect to the amounts shown on page 7. Were you asking, Madam Speaker, about the difference between as I mentioned earlier, in my review, the difference between the executive budget requests and the OFB level being presented today really has a lot to do with more money in TAF because of the resurgence of tourism and the others amount. So just those two categories alone make up the primary difference between $194.2 million in the executive budget request and 109.6 million in the OFB request embodied in Bill 276.
Right, but what's causing the difference between OFB others, 37, versus the executive request of 34? Why that big difference there?
I think we'll ask Steve to answer that, okay? Or Llewellyn, if you can answer that, identify where the increases were. Colleagues, look at your budget bill. It's on page 3, 4, and 5, and you'll see the difference. And then, but Llewellyn will explain, okay? So you can follow.
Senator Talai, if I just may, in the Budget Act, there's a total of 60 special funds. Of the 60 special funds, there's 6 major funds that we hold separately. The remaining 54 funds is normally funds that we don't normally track. We track it every month, but we don't normally avail itself to the collection simply because the amounts are specific to agencies, to programs. And historically, when we looked at that, it's not really so much where we concentrate a lot on the shortage. It is counted. We do take into account at the end, but it's the 6 major revenue sources on the special funds that we normally keep track of, and that's what is reported in the CER report. Okay, but Llewellyn will go ahead and give you a breakdown of some of these funds.
Actually, Speaker, the main reason for the others is mainly the Manpower Development Fund. The executive budget request was requesting 4.4 million, while we are proposing 7.9 million based on information provided by Department of Labor.
Thank you, that's the answer, thank you.
That's where your major increases are.
H2 workers are coming in, so that we agree with that adjustment.
That's where your 4 million comes. Did that suffice, Speaker? All right, thank you. Senator Duenas, was the presentation fulfill your request as?
Certainly, I'm prepared for you to go.
All right, okay.
Member by member. I thank you for that. I think it was really well done. Thank you.
You're welcome. Thank you. Senator Jim Mullen, do you have any question for the panel at this time? You have 10 minutes, not counting the response. Do you want to turn on your mic so everybody can hear you for the record?
Thank you, Mr. Chairman. At this time, under general revenues, no.
All right, thank you. Remember, we're on Chapter 1. Senator Duenas, do you have any questions for the panel on Chapter 1?
Yes, I do, Mr. Chairman, and I think that this may sound like a general overall question, but I think for the purposes of some more of the detailed conversations that have been had with Office of Finance and Budget, and as well as working through the numbers has been presented and agreed upon by the fiscal team, I think it's appropriate to ask this general question overall, and I'll start with Mr. Byrne. We know that the chief executive has done a number of pay increases by executive order. And so I wanted to get from you all of the grand total, basically, if you can, of all of the executive pay raises by executive order contained in this budget. Are they covered, and what would be that total amount?
Thank you, Senator. As to are they covered, that's a matter for OFB to answer, because OFB constructed the budget. In general terms, though, on an annual basis, including, and these numbers include the autonomous agencies that aren't in here, but are part of the pay increase, for instance, the nurses. The total of the nurses' pay on an annual basis was around about, and I'm going to give you two numbers. Right? There was a basic increase of about 17 million, but when you take into account the incentive pay and some other things, it came out at about 26 million. The law enforcement was, and most of, again, that covers autonomous agencies except for the port, which was not covered in the pay plan that was under the executive order, was around about 24 million. And the teachers, which is in the general fund, it was around about 30 million.
So maybe I'll do it this way, Mr. Byrne. Did you provide a cost estimate for the fiscal year 2023 budget, as you are responsible for that payroll and allocations to all of the executive branch agencies? I will go to OFB after this, but did you provide them the information, or was this their best guess?
As Mr. Carlson said, the executive budget was submitted in January, and 2 of those pay increases were not calculated in January. But the agencies are aware there was a communication between the administration, within the administration, with all the agencies. The agencies are aware of the totals of these increases.
Thank you, Mr. Burns. I will go to you, Steve, and OFB. So what is the grand total reflective of having to now do it the way it's normally done in terms of budgeting for pay raises, increments, and the otherwise through a budgetary process at the legislature? So what is the grand total reflected in this budget that took into consideration the pay raises done by executive order?
The total amount, Senator, that we came up with law enforcement, originally when we first did this, was around 18.5 million. We went back, did some reassessment, we found that it's a little bit lower. It's about 17.5, about $1 million less. As far as the teachers' pay, when this first started coming to fruition, we were asking information from the Department of Education, and they gave us a number even as high as 33 million. But that number since has been decreased all the way down to about 25, almost $26 million. So for purposes when we were trying to allocate the revenues and setting aside funds for these pay raises, in the spreadsheet that we provided senators when we met at OFB, I believe the amounts that we set for the law enforcement was about 18.5, and the amount we set for education, I believe, was 29. About 29 million. But both of those numbers have been adjusted downward slightly, but I can safely say that in the FY23 appropriation level as presented in the bill, both of those salary requirements have been included.
Okay, now we know that last year we kind of went back and forth on this because most of the requirements in health were done and absorbed by agencies due to their lapses and other funding opportunities. I'm sure that has now been appropriated in this budget. What is that number for all the healthcare pay raises that were done, either with their respective institutions doing it via resolution or whatever their method was, but just taking into consideration the overall impacts of those health care raises being prepared, but not as part of the budget process?
If I remember correctly, Senator, and this is just off the top of my head, but in the FY23 budget, those salary increases are already incorporated into the budget ceilings of the departments. But if I recall an amount that was presented last year when this bill was actually proposed by Senator Torres, I think the amount came up to around 10 million, roughly. I could be wrong, a million or so, but I believe that was the amount that was tossed around at the time. So as far as how much is set aside for those particular pay raises in the FY23, I need to get back to you because those amounts have already been incorporated into the department's staffing patterns for FY23.
Thank you, Steve. And Mr. Chairman, the reason why I'm doing this is so that we can grasp not only the anticipated revenues in terms of how we've adjusted the budgets due to tracking, but to represent, to the people of Guam as we prepare and we speak to them on the construction of this budget, that what are the priorities and how have those priorities that were enumerated under executive order are now translating into the annual fiscal year budget. And I say that because when we do it this way, then it becomes the priority of the government of Guam. And I'm sure that most of the people, if not every single person in this body, would have to be under desperate circumstances to reduce the critical services and their income and their proper pay adjustments for retention and recruitment and the like. I'm sure there were many other areas that we would go to before we touch that, and that's why the budget process. Now, I'm doing rough math on this now, Mr. Chairman, and we take the 10 million for health, we take the 26 million for education, 17 for law enforcement, and let's see, 36, 46, about $51 million. So with the adopted levels and the change with regard to that, at least for me, my priority has to be, of course, that approximately $51 million that we've made those commitments. Now we can set a baseline, in my opinion, going forward on what we're going to discuss as the funding levels as we go line by line. So going back to you, Mr. Carlson, I have one couple of questions. Lester, you mentioned the back of the napkin CRER possibilities for August. When our public auditor was here and we were discussing the power credit bill coming out of the general fund, and it looks like that's what OFB has done here in terms of giving us actually three categories of adjustment, taking into account a supplemental budget that we basically passed through that bill. So will the CRER then reflect, as the public auditor mentioned in his discussion on that bill, the reduction then of the 25 million in terms of the difference between adopted levels?
I'll answer that question first and go back to something you said about $51 million.
Sure.
Yes, we're making an adjustment to the CRER. The last one had $99.5 million is available. We're already, I have a draft of what I will be providing to the body for July that will show what the actions taken via the passage of Public Law 36106 resulted in, and what is then the net that hasn't been appropriated. So we're going to make those adjustments, sir, so that everybody can see plainly. And they won't be footnotes because the font is kind of hard to read. So we're going to have a little table underneath it. We've already anticipated a need to be able to make people more aware of how the body appropriated a good amount of the excess revenue, and we'll provide that later this month. With respect to your own back of the napkin math, I will remind the body that the executive budget request had all the law enforcement pay incorporated. That action took place in December. We had to readjust the budget to incorporate law enforcement in 23. So law enforcement nurses' pay was captured in the executive budget request. The only thing that wasn't captured was the recent teacher pay, but I went ahead and did a little sneak peek at OFB's revised level for 23 for DOE, and I note that there's a $25 million infusion of general fund money. So what we were at 180 million in 2022, it's now 205 million. So OFB has made the general fund adjustments to fund the teacher pay for DOE.
So my second question, and you know, that's good information for the body, because I was a little curious myself when we saw the adjustments in terms of the adopted revenue levels. I remember specifically, and we'll be reminded as we go line by line, that a number of agencies were requesting anywhere between 4, somewhere upwards of 20% in terms of adjustments to between 22 levels and 23. So that's got to account for where that difference is. As you mentioned, those were already factored in the January request. And so we'll discuss that as we go through. But I still want to appreciate the fact that these things are being now codified in the budget process, which is a wonderful thing. So going back to Section 30, you mentioned that the war claims liability has been exhausted in terms of the need to withhold and the possibility of an $81 million total, making that adjustment. So will you receive that information within this month, or will you receive it basically just prior to the normal time that we receive it, which would be sometime in mid-September?
Thank you, sir. The request from the Department of Interior asked the governor to respond by August 4th. I think we did actually respond before that. And I think it was subsequent to that, if I remember correctly, that we got information from DOI regarding war claims. So we put in the amount, and you know, we have been putting in an $80 million request, and they've been taking money for war claims. The first couple of years was a lot of money, and then the last few years, I think it was like $6 million off the top. But it's just really nice to know that we met the contribution level, and they're not going to take anything else. I don't know when we're going to get that, sir. They're aware of our budget process and the fact that the legislature has to pass a budget by August 31st, and you're on track to do that well in advance of that date. So we can ask, but today's the 10th. It's been about a week or so since we actually submitted that request. But I think that, again, the $74 million number, almost $75 million number, is a good number. It's only going to get better, you know, bearing in mind that there's not going to be anything absent any reconciliation from prior years, you know, that adjustments that Daphne's shaking her head. She doesn't have any information that, you know, we were overpaid in prior years. So that just makes that number even more solid, sir.
I guess my final question would be, maybe it would be for both OFB and yourself, Lester. Seems like a significant number in terms of adopted levels and the request on corporate income tax. Can you kind of give us a description of why the authorized level, and then there was quite a large request from the executive on corporate, and then looks like you fell somewhere in the middle between OFB and the front office. Can you discuss why such a disparity, and how did you come to the middle ground? I guess I'll start with Lester, and then we'll bounce over to OFB. Yeah. I guess if I would put it in context, is that economic activity? Is that, you know, or is corporate adjusted? Maybe that might bounce over to Daphne as well, but I just don't understand, like individuals, right? Individuals might adjust because they don't want to pay the government as much. Maybe they've been getting good tax refunds and they want to have that cash in their pocket maybe every payday as opposed to, but that corporate number bouncing almost by 20 million. In terms of the authorized levels, then the request, then it looks like it kind of, there's some sort of semblance of agreement, or at least a meeting halfway at the OFB level, saying, okay, well, we'll spot that at 85.7.
Give me a second, sir, because I think I'm going to refer to the CRAR first.
I mean, it may be an adjustment. I think OFB might have an answer. Maybe I'll bounce over there real quick because they seem to have been the one who reconciled it. But I just want to see if this is an economic indicator or just businesses changing their, their posture. I don't know.
So for corporate, Senator, what we did was take again look at the trend. And in 2021 for corporate, we actually collected 108 million, and then this year's budget Budget Act, we set the level at 73.9 million, and BBR tracking showed 77.3 million. So as we average those trends, we were coming close to BBMR's number. However, we didn't adopt that number because when discussion with Daphne, she mentioned that she's seeing a downward trend, possibly because businesses are claiming against their carry forward losses. So even if they're making profit, they may be claiming against that. So we took a more conservative approach and reduced that further.
Daphne, would you concur with that? Because that's what I figured. There's got to be an adjustment somewhere in terms of how businesses are reflecting that economic activity.
Right, so there were certain provisions, I believe, of the ARP Act, which, I believe of CARES Act, which allowed for additional carry forwards and carrybacks of losses, which I think had ceased because of TCJA. So what I believe will happen is we'll likely see some of these companies who have not been able to take some of their losses work to take those losses. Something, though, to consider is that at the federal level, there is the Inflation Act, which is also proposing to have a minimum corporate tax of 15%, and I'm just kind of watching. I'm not sure exactly what's going to happen with that. But I do believe, and when I look back, because I also try to track as well the corporate income tax, the trends, and with regards to the amounts that are shown, I believe we agree that the amounts look reasonable.
So, Mr. Chairman, I'll conclude with that for this round. I think you would concur that that's probably the biggest number that would jump out that could get us in trouble. As has been discussed, the reserve and other things have kind of kept us in that we've appropriated for, and other disciplines have kept us kind of in what we consider a somewhat safe level. And then, of course, we always have the imposed reserve, which is anywhere between 5 and 15%. So I just, that number and that disparity, any time I see 20 or 10 million, that's something that could get us in trouble if we were anticipated that revenue. But I think it is reasonable to have leveled out at the 85. So that will conclude my questions for this round, Mr. Chair. Thank you.
Thank you, Senator Reyes. Senator Torres, do you have any questions for the panel?
Mr. Chair, I understand we're on Chapter 1. Does that include all sections of Chapter 1, or should I defer any questions that I have on other than Section 1?
We're only on Chapter 1, so at any part of Section 1 or Chapter 1
Okay.
will be good. It's all about the revenue base.
Okay. So I do have a question then for the panel, and I noticed in my opinion there's an inconsistency with the funding of the rainy day fund, and it's reflected on line 21 to 22 on page 3. That provision for 2% into the rainy day fund is inconsistent with Section 4 of Chapter 1, where we, in that language in Section 4, suspend the provisions of that, the provisions of the rainy day fund. Specifically, Section 4 says that notwithstanding any other provision of law, rule, or regulation, the authorization contained in that rainy day fund section of the code which is relative to the expenditure of unappropriated annual general fund revenues collected in excess of appropriations, is authorized to liquidate obligations for refunds, earned income tax credits, and prior year vendor payables. So, and then there's other added language about authorization being only by appropriation. So what I'm pointing out is that Section 4, the fact that we are suspending it is inconsistent with
with the fact that we're funding it. And what concerns me about the language in Section 4, and Lester, maybe you can comment on this. If you look at the plain language of Section 4, by suspending the authorization to use that money towards refunds, tax refunds, earned income tax credits, and prior vendor payables, it almost implies that that authority is taken out by suspending that. Is that an overreach of that interpretation if we were to strike it?
Actually, I think it's representative of what the legislature wants to do, and basically reinforcing that expenditures from the rainy day fund shall only be authorized by an appropriation or appropriations by the legislature. So notwithstanding what had transpired earlier, where there were general fund revenues collected in excess of appropriations, which the body deliberated on for Bill 325, and subsequently did make appropriations to the rainy day fund, only to be tapped, by an act of the legislature. So I'm okay with this because I think I understand what the genesis of this is, and it's basically saying that you're suspending. We don't have any earned income tax credits to deal with. We're well caught up in vendor payables, tax refunds. So the nature of what was there before, I think we've progressed to the point to where the legislature has $28 million now in the rainy day fund, and only the legislature with a vote of 10 can appropriate that money.
Thank you, but I would tend to disagree, though, with that statement. I understand where you're defining the legislature's intent, but I think that this language is a bit awkward to be included here, this particular Section 4, because if you look further, this Section 4 suspends Section 22436A of Article 4, Chapter 22, Title 5, Guam Code annotated. That is the specific, as you're aware, is the specific section of law that deals with general fund appropriations to the rainy day fund cap. What I want to point out and why I think that the need to be very clear about the rainy day fund expenditures being authorized by an appropriation authorized by the legislature, the need for that is already captured and spelled out in Section 22924 of that same Chapter 22. So I don't know necessarily if we need to have that language, or if the next chapter, 22924, which deals with deposits and appropriations, is absolutely clear that the expenditures from the rainy day fund shall only be authorized by an appropriation or appropriations authorized by the legislature in Guam. So my point is, and Steve, I know you want to comment. Thank you, but I think what I'm saying is, perhaps because we've decided to fund it, in prior years we suspended it because of revenue shortfalls, or the projected revenue shortfalls. We've suspended that temporarily, but what I'm saying is now we are in a position to not require ourselves to suspend it, revert back to the plain language of Section 22436A, the rainy day fund, and rely on the authorization being restricted to the legislature's appropriation under the subsequent Section 22904, deposits and appropriations. Steve, do you see it the same way?
Just for clarification, Senator, one, if you look at page 3, line 21, where it says we do set aside the 2% rainy day fund, in the past 2 budgets, we also, on the next slide, would indicate that it would be suspended. We are not suspending the 2% rainy day fund this year. The Section 4 that you're referring to, I believe the key word there is excess revenues. So anything above the adopted revenues is what this section is meant to do. But you're absolutely right in your assessment if we are going to suspend it. But we are not suspending the rainy day fund in the 23 budget.
But you are, by the plain read of it, on lines 6 and 7, it reads, is hereby suspended, and that's what I'm bringing
Yep.
up.
But if you go up to line 5 or 4, it says it's relative to the expenditure of unappropriated annual general fund revenues collected in excess of appropriation. So the intent there is that anything in excess of the 7, if it's in excess of the 713 that we are proposing in the bill, then that section, yes, would be kept in reserve and only can be appropriated, as you're saying. But just to clarify that the 2% that's reflected on page 3 is not being suspended. It is intact.
Yes, I see your point. Let me get back to you on that matter, because I'm trying to, I understand now that you're pointing out that this has to do with the surplus monies as opposed to that, but I believe that there may be an amendment that might be appropriate to clarify that, because in the plain read of it, it's because it refers to the rainy day fund. In this section, actually the title does say excess revenues collected in excess of appropriations, but the mere mention of the rainy day fund, I think, is what makes it a little confusing. Because I know in other instances we had, and that is why, Lester, you pointed out that notwithstanding the suspension, there was monies deposited in the last budget that we passed, or the current budget, where we had a certain amount that was dedicated towards tax refunds, like 70%, and then the remaining 30% went to rainy day fund. And I think that's what made up that balance that you were talking about, that plus the 15%. So what I think my point is, as I look at this further, and I'll get back when I have more time to look at it, is the language of the bill is rather confusing, because there are too many moving parts, and one can be misinterpreted and not read in conjunction with another at another part. So I think there's a way that we need to better clarify that, and I'll get back to you.
You might want to start out section 4 like section 5 for fiscal year 2023. That way everybody understands that you're adopting a revenue level, and then for fiscal 2023, only anything that's captured above can, be effectuated by this section. But as Mr. Guerrero said, you are funding the rainy day fund. So maybe I agree that it could be a little bit better written. But
yeah, and then also if you look at section 22904, it also talks about maintaining a threshold of 10% and not more than 10%. So as we're building that rainy day fund with the 15 million, what we set aside in this budget with that 30% of any excess, and then this one, that's where we have to kind of gauge whether we're, what is it that we're doing? Are we setting aside 2%, or are we aspiring to 10% and no more than? So that's what I'm saying. There's different parts of the section and the budget bill that I mean, for lack of a better word, I call it wonky. It leaves you to be confused about what exactly the implementation is and what your thresholds are. So I will get back to you with that, Mr. Chair. Thank you.
Senator, I'm open to any amendments to make clarification to these type of provisions. I am very much open to that.
All right, thank you, Senator. Senator Nelson, do you have any questions for the panel?
Thank you, Mr. Chair. Steve, can you just explain the difference between the FY22 Total general fund revenue of $706,886,659. And now we're looking at FY23, total general fund revenue, $809,921,190. Can you explain why the difference in the increase?
Are you referring to the general fund, Senator?
Yes, the total general fund revenue available for operations in comparison with FY22. So there's like almost a $90 million increase in 1 year.
So if I understand your question correctly, you want to know the difference between the FY22 and FY23 revenue?
Yes, the explanation on why the increase, the amount was so large.
Okay, we can do it by categories if you prefer to. Go ahead.
Okay, by categories. We'll start with corporation. From OFB's proposal versus the amended FY 2022 budget is 11.8 million more. And again, that's considering the trends. Again, in FY 2021, we collected 108 million, and then we're tracking now at, we're tracking at 77 million. That would given, again, roughly what executive budget request indicated, about 95 million, but we adjusted it down because, like we said, of the corporate possibly filing against their loss, carry forward losses. We also have 17.8 million increase from 2022 for individual taxes, and that's mainly because we're tracking right now at 100 million in collection, well, although we budgeted in 2022 only 71.2. Withholding taxes increased from 2022 by 5.9 million. Again, that's based on what we're just seeing in tracking, so we're continuing that trend. And business privilege tax, we increased that by 11.6 million from 2022.
Okay. It's okay. Can I just reserve my time?
If you like to, we can do a quick recess. You can sit down and
Yeah, can I get a
talk.
quick recess, Mr.
Let's,
Chair? Thank you.
let's go to recess for a few minutes. Thank you. The committee of the whole is called back to order. Senator Nelson, your
No,
questions?
Thank
may
you,
continue.
Mr. Chair. The OFB director was very clear. I have no questions at this time.
Madam Speaker, do you have any questions for the panel, ma'am?
Yes, thank you very much to the panel and to the OFB for their work on this budget for FY23. So this OFB budget revenue projections that we're talking about today, these are $17 million higher than the governor's request, approximately. They're $90 million higher than FY22 estimates. And and I know that they said in this bill that you've now covered $30 million in teachers' pay that was not in the governor's original bill. So in order to cover that, it looks like we had to reduce some other appropriations by $13 million. Could you just elaborate which ones were reduced? Where'd you get the $13 million to make up for the $30 million DOE raises?
Senator, let me just go back and remind you that, remember when we first started this, and like Mr. Carlson said, that when the executive budget was submitted to OFB, it was submitted back in January. And the teachers' pay and a couple of other things weren't incorporated into that budget. So when we looked at the budget, we found out that, you know, there's a lot of things that we need to reconsider and readjust in their requests. And of course, one of them was the teachers' pay, which took almost more than 50%, I'd say maybe 30%, 33% of the total amount that we're requesting, which was 70 million above the FY22 authorized level. So even before we attempted to fund the teachers' pay, we went back to the FY22 levels of all the departments and agencies and reassessed. One of the things we looked at was their expenditure rates. If they weren't expending up to the level which we felt was appropriate to at least commensurate with their appropriation level, considering, you know, their expenditures to date, their encumbrances, and some of the things that we knew that was coming down the pipeline, like recruitment in progress. We funded those. But everything else we basically cut. And one of the things that I know I gave my staff the instructions that any vacant positions within that budget that was more than 3 years that hasn't been filled, I want you to cut them. We need the funding for those. Those positions normally are positions that are critical, not critical, but just very difficult to fill, or they're numerous. There's too many of them, and over the years, it's just almost impossible to fill these positions. So because we needed the funding, that those expenses basically were being afforded, we shifted those to try to cover some of the teachers' pay, of course, and like Mr. Carlson said, the nurses' pay and the law enforcement were already incorporated into the FY22. But we also had to fund the organic growth and those kind of things, not so much on the line agency, but also in the reserve categories such as judiciary, legislative, mayor's council, and the sort. So by the time we were done, the 72 million that the 70 million that was reflected in the executive budget wasn't sufficient to cover those costs, and that's why we had to pump it up by 17 million more. So the difference between the FY22 and the FY23 is actually 90 million in terms of revenues. But we did cover all the salary increases for the teachers, law enforcement, and of course the nurses. That's already incorporated into the salary, into the level, and all the organic growth that we felt that was appropriate and required to be included. Don't forget the bond payment, the retirement, and of course we reinstated the rainy day fund. So that basically comprised of the $90 million.
Right. My question is, which agencies were reduced compared to the governor's request?
Oh, we have
to make
that.
up this that
Yeah, we have that.
17.
You have that list? No, yeah. You have that one? I think I have it here. Yeah. Okay, there. Senator, if I understand your question correctly, you want to know which agencies we cut over the 22 or over the executive budget?
over the executive's budget's request.
Okay.
So in order, we're giving less than the executive requested.
Again, Senator, like I said, once we realized that the executive budget did not fund the teachers' pay, we kind of really didn't look at the executive budget request departmental levels because all of those were kind of like thrown out of whack already. So what we did is we just took the 22 levels, took that level as a starting point on how to determine the FY23 ceilings. And I can tell you what departments were cut, what was given a status quo, and what departments received an increase, if that's what you like.
Yes, I want to know about the cuts.
Okay.
And particularly, yeah, from FY22, that's fine, but also if we're giving less than what the governor requested, I'd like to know that too.
Absolutely. What are these? Okay, for the agencies, can I just start with the agencies that are status quo? So we can throw everybody out. Oh, no? Okay.
No need to read those.
Just the ones that are cut. Which are the ones that are cut? These? Okay, starting with, we have a total of 11 agencies that received cuts over the FY22, which totaled $5.1 million. Those agencies include BBMR, DPW, Land Management, Professional Engineers and Architect, Guam Regional Transit, Guam EPA, Department of Parks and Recreation, Department of Chamorro Affairs, the Mayor's Council of Guam, Chamorro Land Trust, and Guam Solid Waste. Those are the 11 agencies that got a reduced ceiling over the FY22 levels.
All right, and how many agencies are receiving less than the governor's request?
Yeah, we didn't do that, Senator, simply because we just didn't use the governor's request at this point.
Right, and when you said you cut positions that were not filled, does that include those hard-to-fill positions such as the vacancies in teachers that they continue to have and the vacancies in nurses and some of these other very hard-to-fill but absolutely necessary positions?
What we did, Senator, is we looked at the staffing patterns of every department and agency. And the first course of order was, like I said, all those positions that were vacant more than 3 years, they were cut. The funding was cut from those positions. There are other positions within DOE is a good example. When you got a total of 200 teachers, and that 200 teachers have been in their staffing pattern for the last 2-3 years, and they could only fund 100 teachers, 50 teachers. We looked at that and says, okay, we will cut the funding, but as far as the title and the positions, we left that up to the agency to determine how they would want to fill those positions. We didn't tell them what positions they can fill. We just told them, this is your funding level. Please work within it.
Right, so that does include DOE and nurses potentially.
It's kind of like uniform across, Senator. We didn't make really no difference to either one, whatever department was. We just worked with them, and as a matter of fact, we notified most of the agencies and told them what we were doing, and they were kind of like in an agreement.
All right, so now for revenue and taxation, these questions are regarding tax refunds. So the provision for tax refunds in this substitute bill is $62.8 million. In February, BBMR requested $90 million that be set aside for tax refunds. So this is a significant difference. 62.8 in this bill versus 90 million requested by BBMR, or the governor. So is Revenue and Taxation comfortable with setting aside less money for tax refunds in FY23 than what was originally requested?
Right, and so with regards to the provision for refunds, if you notice, historically, that $145 million is used as the basis for refunds. As you know, in this past year, there were some additional amounts that were being paid out. For example, for those people who didn't get the EIP 1, 2, or 3, they were able to receive a rebate recovery credit. Those rebate recovery credit amounts are included in the gross amounts that are shown, the 207 and the 176 million. And so, so the numbers there are slightly higher than what we've seen in historically because of the increase in the CTC, of the rebate recovery credits which were paid out. And as I've been discussing also with Director Byrne, of course, because we are concerned about making sure that the provision is sufficient, you know, we did work to try to come up with a range, an estimate, and we believe that the amount that's indicated, the 62.884 million, that is a reasonable estimate for the provision.
So what changed between February and now that in February you estimated 90 and now you're only estimating 62?
Perhaps at the time that the estimate was prepared in February, we had just begun to make payments on refunds at that time, and so I'm not sure the 207 million, how that was derived, but my guess is that, you know, the FY2023 estimate that is now showing the OFB level actually reflects our experience over this last several months. So I think it's just a matter of more complete information at this time.
All right, and so do you agree then with the amounts that have been stated for the earned income tax credit, the child tax credit, and the additional child tax credit?
With regards to those amounts, you know, again, these are, you know, these amounts are really estimates. I believe that what was utilized was averages. We are actually seeing the EITC run a little bit lower than the 52 million that's showing, and that's because you know, EITC, although historically we've seen it run in the 50 or about mid-50 range, EITC is a credit that's paid out for earned income. And what we saw in 2020 and in 2021 when we did have, of course, there was unemployment compensation, and we saw, of course, with the levels of employment that we, you know, of course, have been dropping. And so we saw EITC drop slightly. And for 2020 tax year, we did pay about 48 million in EITC. But as I was talking with my colleagues, again, something that's not included here, which perhaps helps to offset the fact that maybe EITC may be a little bit higher, is that there are rebate recovery credits that are not taken into consideration as well. So, and for this particular, as of this year for 2021 tax year, which we've been paying in 2022, we've already paid about $8 million in rebate recovery credits. So again, what I believe is that the amounts, these are averages over the last few years, and those averages are good averages, and we believe that that 62.884 million, Madam Speaker, that is actually reasonable.
All right, and will that amount also be able to cover any processed awaiting payment?
I believe so, and this is the reason why I kind of wanted to make a few points with regards to the provision and what we're seeing this year, which perhaps we hadn't seen in prior years. Number one is that, you know, of course, we work to accelerate payments. So the amount of outstanding or payments for refunds that we have that's, you know, for process that's waiting, we've seen it continue to drop. And so we don't have that same level because, again, we're processing at this time. I think as of last week, we were at July 7. So because of that, the acceleration of payments, and we were able to kind of catch up, we don't have that same level of outstanding liability that we did last year. Around this time, we were, I think, about 2.5 months behind where we are now.
Right, but the liability, according to your last report, is 19.96 million, 20 million. So would this also cover that?
I believe it will, Madam Speaker.
All right, thank you. And then, so generally then on the revenues, so the June 2022 CRER is tracking our revenues to be, this is June, sorry, I didn't convert this to July yet, revenues to be 806 million, right, for FY22. And in this bill, OFB's predicting 809 million around there. So it's very similar to like the FY22 actuals, I guess, up to date. And I just wanted to get your rationale behind that. Do you think FY23 is going to be similar to FY22, yes, even when we're expecting increased recovery? Or, you know, businesses recovery?
Madam Speaker,
Oh,
which-
maybe
which panel would you
BBMR,
like?
or I don't know, well,
Or
Steve
OFB?
did the budget, yeah.
OFB, maybe you can answer that, Steve?
Yes, and our assumption in creating the OFB levels is that we did use the current tracking as a baseline because we believe the the conditions will be the same for 2023. Right now, we used about half of ARP, and the half of that ARP will be available in 2023. And then there'll be also increased activity, like we said, with the Tourist Attraction Fund in tourism. So that will help us at least achieve the levels we propose, which, like you said, is 90 million more.
Okay, but it's only the levels that we're currently achieving. So I'm asking, why not more? Why not, why are we not accounting for an increase in tourism or an increase in construction projects? Not on those special accounts, but just an overall, right? Why would we not do better in FY23 than FY22?
I guess, Senator, the figures that you're seeing here, we took everything into account, but then again, it's our conservative approach in how we did this. We could have gone, up to the max of what we're trending, what we're collecting, what we're seeing, but we're still, like you said, there's still that chance that things might change in the future. But right now, we're hoping that things will be more prosperous as we go forward, as things are looking out right now. So we hope that trend will continue.
Right, we hope and if it continues, we will be where we are today, right? Next year. But we are hoping it gets better than today next year, right? Aren't we?
Yeah.
But our budget's not really reflecting that, I think.
Considering all things equal, as you mentioned, I'm also of the opinion, like I said, over the last several months, I personally have seen an increase, basically, in activity here on Guam, both from the tourist industry. I see more people out. Collections have continuously held steady, way beyond our projected amount or authorized amounts. So I still feel comfortable that, despite what could happen, that we can go back and relapse into what happened the last 2 years. I also feel, though, that there's a good chance that things will get better. And that's what's showing in our numbers.
No, your numbers are showing that we're going to do as well next year as we are doing this year. We're going to do the same, right? And I'm asking, does anybody think we might do better next year than this year? Or why not? That's just a general.
Okay, let me just kind of put it this way.
Because I agree with you. We're seeing more activity. We're hoping it's looking better for everyone. Yeah.
One, we're still in a pandemic, okay? So that's one thing. So people are really not out there just doing what they want to do and stuff. So that's kind of like kind of govern, basically, what's happening out there to some extent. But aside from that, just taking what we know today, especially over the last, I would say, even Mr. Carlson would agree, over the last 9 months, back in January, the CER report was only tracking 35 million above. Here we are 9 months later, and we're up to 100 million, almost 100 million. So that in itself has changed my outlook on what I used to have back 9 months ago. And what you're seeing in the budget bill right now is a result of all those activities that have since taken place when we first started this budget.
Okay, so I agree with you that, and BBMR, that we are probably likely to do as well next year as we are doing right now, right? And we didn't know that in February, January when you submitted your estimate. So we're all agreeing to this higher estimate to be likely. My question is, maybe I'm going to ask Lester now, Mr. Carlson, do you think we might do better than this? Or are we only expecting to do the same amount next year that we are doing this year? Because that's what this is showing.
Thank you for the question, Madam Speaker. If you go back to OFB's presentation on page 3, I think maybe there's a little bit more context at the very bottom line. Total general fund available for appropriation. The initial authorized level for general fund was 623 million.
You're talking about the bill or their slideshow? Okay.
The slideshow, yeah.
Yeah, all right.
Yeah, so page 3, So the initial budget as passed by the body, Public Law 3654, had $623.5 million in general fund funding. The body made appropriate revisions under Public Law 36106 and raised the general fund amount recently to 678. So there's an increase of about $55 million there. And now we're going from 678 to 713, which shows a continual progression consistent with what it is we're talking about. So I believe that the numbers on the bottom of page 3 really do show where the confidence is, and more especially, there's a lot of money in construction that we're getting. And the increase in the H2, which I agree with wholeheartedly because those are actually realized numbers, will actually benefit and provide real income because the H2 workers are here because there are projects that they're working on. So I agree with that, and that basically correlates into the biggest single driver of our economy outside of tourism, which is construction, our local construction combined with military construction. I see it everywhere.
Yeah, do you expect more next year? My question is not to justify the increase from last year to this year. I'm asking you, do you expect more construction next year than this year?
Yes.
Do you expect that we are going to, because we're only estimating in this OFB bill to receive what we are receiving now according to your CRER. And I'm asking you, with all this increased construction that you described, and we've been told there will be increased tourism and other things, that I'm asking, should we expect more than what we are receiving this year?
I would hope so, but I would also like to, for once, put the conservative hat on. I think that where we are right now and the adjustments that were made in 36106 were appropriate. Once we get there, right, like midstream of fiscal year 23, if the body sees that we are continuing to receive revenues in excess of the amounts adopted, then we can take the appropriate action. But let's get there first.
All right, well, I have no problem being conservative. I just want to know and want to make sure there's not something that you guys are thinking about that we don't know about, that you're thinking we should not be more optimistic for some reason. And we're going to predict for next year what we are receiving this year only.
Not from our end, ma'am.
Okay. The Section 30 amounts, I know you said you're requesting now 81 million because there should be no more money taken out for war claims. But can you just confirm, so the amount that we're estimating in our bill is actually less than last year's? Yeah, it's less than the FY22. And I want to know why are we estimating less in Section 30 than FY22? And how much did we actually receive, or have we received? Or is that not yet?
The CRER shows what it is that we got. That's actual, the 76,141. So that number is a good number. It was probably, we may have looked at additional war claims being taken out when we provided the basically $75 million number in the executive budget request. But the amount that we requested just July 29th was $80,197,665. So that was the request made. And then, as I mentioned, we were given assurances that no more war claims were taken. So we'll see what they come back with.
And you expect that the end of September?
Oh, no, it should be sometime this month.
Okay. You'll let us know?
Yes, ma'am.
All right. Okay, then one more for this round is, in the Bipartisan Infrastructure Law, is there a report available that shows how much Guam will be receiving, and will that impact any of these agencies?
We're starting that just like we've done on our website for CARES, CRISA, and ARP. We only have a few projects. Honestly, the Bipartisan Infrastructure Law, they're not doing formula grants right away. They're doing competitive grants. I don't understand why. So like the money for road paving and road repairs that we're anticipating, that's normally given in the way of a formula grant, similar to what FHWA provides to DPW. Unfortunately, they're not jumping on those right away. They're writing like rules and regs and doing competitive stuff first. As the body's aware, Mr. Tyrone Taitino was tapped to oversee that on behalf of the governor. I'm not aware of anything other than I believe it was I think it was internet thing that there was a partnership with a couple local providers. I think that's the only thing that we've received so far.
All right. Do you have a list of potential for that?
We have a list. It's not that extensive just yet. We coordinate these activities and grants with the state clearinghouse. So what we have on our website is not even half a page so far. And of that, I think, again, it was only like $30 or $28 million for that internet thing that was done. That's the only thing I'm aware of.
All right. I want to confirm about public health. The reason I'm asking, I want to know if there's any, if we can get that list before we're done today, maybe. Then I want to confirm if there's any potential money going to public health. It looks to me like I want to confirm if it looks like the governor's request was $70 million for public health, but we are giving only $61 million by this bill. Can you confirm if I'm calculating that correctly? And just explain that.
Are you referring to the Department of Public Health Appropriation? Or are you talking about the
Yes.
allocation to health?
Well, Department of Public Health, because I'm looking at the governor's request, 70 million, and the agency, yeah, and then 61 in this bill.
So your question, Senator, is what was in the executive budget versus what's in the bill? Okay.
Yes.
We're talking about total fund source, which is the general fund and special fund. We're talking on the executive budget, I believe it says 70 million. And then what we proposed in the budget was 63.2 million.
Oh, could you please explain that? Yeah. I mean, does BBMR agree to that? Is the governor's request adjusted, in other words, from 70 to 63.2 for public health?
Madam Speaker, we're talking about revenue at this point.
I
If you're
know.
going to go into departments,
I only need to know
it'd be
because I
fair
need
for everybody else.
to
I just
know
wanna-
if the revenue is enough to cover public health.
Okay.
And that's why I want to know whether those amounts are sufficient or not, according to the governor. Yeah.
We took the ultra-conservative approach for Medicaid match for the entire year. So the amount that we requested was at the 55-45 level, knowing full well that we're at 90-10 until the end of this calendar year. So our request for the Medicaid match was ultra-conservative. So there's two things that the body should be aware of. One is that the Medicaid match requirement is higher throughout the entire fiscal year than is necessary. There was also recent legislation that started to address at the national level what's known commonly as the Medicaid cliff, and that was not part of what was recently passed with that climate bill, but it was part of the discussion. I imagine that will continue to be part of the discussion, and there might be some relief that we can look forward to getting, and we should advocate for it. But what we put in was a higher requirement for Medicaid than what is necessary. So there's some room there to be able to work to get to those numbers. There's also a couple of grants that we're loading. One of them specifically is a $949,000 ARP grant for Medicaid that Mr. Byrne and I are working on, and that will certainly help. It has a looming deadline, which we are working with public health to get extended so that those funds will be available in 23, fiscal year 23. So they haven't been, the account hasn't been established just yet. But those kind of things operationally that we know that will assist in the operations of public health and the funding of public health, I'm okay with this number.
You're saying the governor's request of 70 million, you're actually okay with the 63.2. I'm only seeing 61, but you're saying there's 63.2, that you're okay with that?
We'll be able to make it work, ma'am.
All right. Do you think if they don't do the FMAP, then, or, you know, continue the current percentage, what would you do?
Well, again, the request for the governor's office was on the high side for funding based upon 55-45. I would imagine that OFB used the 90-10 to the end of the year and the 55-45 for the remaining 9 months. OFB can confirm that, but again, we have $1 million, and actually there's two tranches of that $949,000 that we're looking at being able to load and make available. So there's a couple of things that we know that didn't get addressed immediately by public health, but we're aware of it, and we're pushing them to ask for extensions while we're loading the funds for availability. So we already have that kind of like that in our back pocket to assist with the funding requirements.
Okay, so there's a $7 million difference between the governor's request and OFB's bill. There's but you're saying there's potentially two $949,000, so almost $2 million of ARP grants potentially available. So that would still just leave a gap of 5 if the Medicaid percentage changes back, right? Reverts back. It doesn't, yeah.
Yes.
Okay. And you're saying that you can handle that? You're
Yes,
going
ma'am.
to take care of that? Okay. All right. Thank you, Mr. Chair.
Thank you very much. Senator Parrish, do you have any questions for the panel?
Yes, I do. Thank you, Mr. Chair, and thank you to the panel for being here. So I just want to go to page 3 of the presentation, and maybe if you can explain The relationship, is there a relationship between the amount that we receive in individual income tax versus corporate tax? Maybe this question can go towards Director Shimizu.
So the question, just to clarify, Senator Perez, is there a relationship between the amount of the individual income tax and the amount of corporate income tax?
Yes.
You know, I think that they're governed by separate sections of the code, but I do believe that as I look back at my kind of the tracking, I do believe that the figures here actually, anyway, but I actually am not involved in the calculation of the individual income tax calculation. Sorry. We do, I don't believe that, no, if to answer your question, there is no relationship between the individual income tax and the corporate income taxes.
Okay. All right, so this question is for Director Carlson. So in regards to the projection for the executive budget or executive request, you have here the corporate tax of $95 million. So how did you arrive at that? Yes.
I think it was basically averaging, as was stated by Ms. Terlahi earlier. We received $108 million a year or so ago. So we do 3-year averaging. We do the CRER tracking. So we came up with the $95 million in April based upon an average of collections. And 6 months, 7 months later, we're looking at entertaining a reduced amount based upon tracking and what the CRER is forecasting. Again, with averaging and maybe the cessation of some carry forward credits that Director Shimizu had spoken about. But we're okay with the number. For corporate. There's adjustments that are always made along the way, and this is one of those adjustments that it's downward from the executive budget request, and we understand the rationale behind it.
Okay, so how did you get the adjustment? What was the adjustment based on?
I didn't make the adjustment.
Oh, so who did? Okay, some question for OFB. How did you figure the adjustment for the corporate income tax?
Yes, Senator, how we came up with those numbers, we just average it out what we're collecting now on towards the collection. That's how we came up with the number.
Okay, so if you're collecting, what are we collecting now
For
the corporate income tax?
if you refer to the BBMR CR report, they'll tell you we are collecting or tracking 77.6 million.
Okay, and that's prior to the end of this fiscal year, right? So how did you then get to 85 million for yours? Because I'm trying to figure out the difference. What is causing this difference between the executive and OFB's projections?
Okay, as it was mentioned earlier, the reason why we have a difference of between OFB and the executive budget is because if you look at the tracking now, I mean, if you look at FY21, the audit says or noted that we collected $108 million, and for FY22 we are tracking at 78. That's not what we're tracking. So if you took the average of that, it comes out to about 93 million. So we only utilize, the FY21 and then 22 for these years since they're more specific to the conditions of what's happening here, and we averaged that out, and that's how we came up with the 85 million.
Okay, so you explained how you got the 93. So what numbers did you use to get the average of 85 million?
We took the tracking, current tracking of 77.3, and what we've collected over 21 and 22, and took the average of that.
Okay, so you used 100, 78, and 77.3? to get the average of 85?
How did you get the 177?
I'm sorry, I'm just repeating what you told me. So you said 100 for the year 21, right?
108.
108 for the
Yes.
year 21?
Yes.
78 for the 2022?
What
I'm
we're
sorry.
tracking, yes.
And then currently it's 77.3. That's what you're saying? Currently it's 77.3.
No, what I'm saying, Senator, is you take the 108 plus the 78, the tracking, you'll come up with 93 million.
Okay.
But we,
Yeah, no,
u-
yeah. So basically, you're using those three, what I'm trying to confirm is that you're using those three numbers to get that average. So basically, you're using 21, 22, and what you're tracking now to get this 85 million.
You're correct, Senator.
Okay. Do you foresee, so this question is for Department of Revenue and Taxation. You were mentioning earlier that the upcoming congressional bill that stands a good chance of passing, and with a 15% corporate tax, minimum corporate tax, what effect would that have on corporate taxes on Guam should it pass?
First of all, I wanted to preface by saying I have not read through that. I actually have just kind of seen the headlines of it, so I haven't looked into the details of it. But if there is a minimum corporate income tax rate of 15%, and that's codified in the Internal Revenue Code, because we are a mirror territory, then that will apply to Guam.
Okay, so you haven't estimated what the impact would be?
No, we have not estimated that.
And are you planning on doing that?
Again, it's until it's actually in its final form and finalized, then we have not worked on that.
Do you foresee it having a positive or negative effect on collection of revenues for corporate taxes?
So the way I understand it is that if there is a minimum of 15%, then those corporations which currently are not paying any, perhaps because they may have a loss or because they have no income, will pay 15%. But again, I would really have to look at the details of the bill, and of course, we would have to wait for that to pass.
So at this time, you don't have any estimate?
No, ma'am, we don't have an
Would
estimate.
you be able to provide an estimate just as an exercise? So, now that we're in the middle of the budget, this is critical to know what revenues for the fiscal year, because if this bill does pass, it will have an impact on the current revenues.
You know what, we would have to look at it, and we could do our best to provide an estimate if that were to become law. But again, we don't have an estimate right now. But yes, Senator Perez, we could do our best to go through an exercise.
Yeah, greatly appreciate that. So this question is for OFB. So in the page 3 of your presentation, there's under business privilege tax, that section, it says other taxes. What are the other taxes in that list? Is it a long list?
It's admission and use tax.
I'm sorry?
Admissions and use tax.
What's the emissions tax?
You mean the admissions tax?
Can you provide a breakdown for each of those?
We can, Senator.
So while you're doing that, I can ask this next question for BBMR. So what is the difference? So you're projecting a 4.5 million collection of whatever these other taxes are, and versus OFB's collection. Can you explain how you got those estimates to Lester? Page 3, same page of the presentation.
You're talking about the other taxes under BPT?
That's correct, in the presentation.
Okay, so for everybody's information, the initial FY22 authorized level was 4.1. When the body took action on on Bill 325, now Public Law 36106, there was no change to that. Our executive budget request came in at $4,500,000. OFB has a lower amount of 3.9, essentially $4 million, or about a $500,000 difference. We're still looking at that 4.5 as a number. When we did our back of the napkin CRER the first week of August. So the difference in the bill versus what we initially submitted is about $569,000. There are areas, Senator Perez, that I'm not totally averse to. This is one of them. If there is a $500,000 recommendation for that funding level, but the $238 million that we started out with in FY22, that was amended to read 290, and now is at our level of 302 million for the executive budget request, then we've gotten substantially better in overall BPT. So I don't see a need to dispute or look at that number as being something that stands out when we went from 238, basically $239 million a year ago to 302. And we're comfortable at that number. So I'm okay.
Basically, what you're saying, you're comfortable with the projection of the other tax portion?
More so, I'm comfortable with the recommendation that goes from $239 million a year ago to 302. So I'm looking at the big picture, not just a component issue. So I'm okay because we're going from 243 million to 306. I'm happy.
Okay, so we collected 4.5 million. Is that correct? In 21? So the number you have there projected reflects what we collected, actually, closer to what we collected.
We're tracking 4.2.
In 21, it was 4.5, so you're tracking 4.2?
Excuse me, it's not broken out. Hang on a second. The other taxes that we have in the CRER, there's a section there that says use tax, and that's the number that the adopted level is based upon, 4.1, and that's the number that you see on this page, 4.105.
Yes,
So
but there was
we're tracking 4.2.
Okay, but there was another part of this. So OFB, have you found the amount?
Yes, Senator, for those categories, the amounts are nominal. Part of the use tax include recreational facilities.
I'm sorry, can you, there's a little feedback it's hard to hear.
Part of the collection for use tax includes recreational facility fees that they collect, that goes into the use tax account. Admission tax, which includes, anywhere from, I think, it's not much, it's importation fees, use tax, local purchases. These are the subcategories within use tax. You got penalties, you got business importation use tax, individual importation use tax. So there's subcategories within the use tax, and they all collect different amounts, which tallies roughly about 4.1 million as we're tracking. And just for clarification, for FY20, based on the audit, we collect the fund collected 3.2 almost 4 million, and in FY21 collected 3.7 million. Currently, right now, as Mr. Carlson said, they are tracking at 4.2.
I'm sorry, you were collecting 4 million in 2020? And
No, in 2020, the total collected was about 4 million, 3.9 million. In FY21, the total audit says you're collecting 3.8 million.
And then in last year, you're tracking 4.1?
No, FY22, we are tracking, according to the CER report, we're tracking at 4.2.
4.2.
Yes.
And Lester, you were saying what amount were you tracking as well?
Mr. Guerrero just stated it. He said right here, 4.2. So,
Okay.
yeah, we're saying the same thing.
All right. So then how did you get 4.5 in your executive request?
If we're tracking 4.2, right, then, you know, doesn't it make sense that we're closer to the 4.5?
Well, yeah, I'm just wondering how did you get to 4.5? Or how did you get that number? So basically, that's what I'm asking.
When you take the additional business privilege tax amount coupled with the use taxes that Mr. Guerrero just went through, you come up feeling pretty confident that you can get a bump in what he mentioned the audit showed at 3.9, 3.8. So when he does the averaging, like we do, you'll come up with a lower number. But as I mentioned earlier, the overall BPT, including the use tax, is $306 million versus 240 something. And so I'm fine.
Okay, so I guess what I'm hearing is that you see the use tax as a function of the business privilege tax? Or are they two separate, completely different things?
I think that economic activity, when Mr. Guerrero was going through the litany of areas that constitute the use tax, I think you can make a correlation. And while the overall, I'll continue to say this, Senator, the overall increase in BPT is substantial. It's huge. So, you know, we're talking about $569,000 when we went from 238 million to 302. I'm more comfortable with that increase from 238 to 302 than I am for a downward adjustment of $569,000.
Okay, this question is for Director Shimizu. In the law, is there a direct correlation between BPT and use tax? I mean, is there, in the law, does it state BPT will yield so much use tax?
With regards to BPT and use tax, I believe they're actually separate sections of the law. That's one. The BPT is assessed on gross income or gross receipts, as is stated on the BPT. The form is GRT, and then the use tax is, of course, reported on the form UST that's provided to the Department of Revenue and Taxation from Customs and Quarantine.
Okay, and can you explain how use tax is collected?
So use tax actually by law is collected by the Customs and Quarantine branch or department. And so, of course, when products come in, then those products or when they are to be, and I am not the Customs department, so I'm just generalizing, and so likely there are different variations of this. But in a nutshell, when products are received, the value of the product is utilized to be the basis for the 4% use tax that's assessed. Now, there are some issues, of course, that we know with regards to use tax occur because for shipments for air cargo that is coming in through freight forwarders, the Customs and Quarantine does not have the ability to hold a shipment. And so whether or not the use tax is paid on those shipments, those products cannot be held and they are released. And I believe there is a federal court case that sets precedent for that. But in general, again, they do, and also to take note, there's a few things with regards to use tax that are important to note. One, there is a $5,000 personal exemption. And that $5,000 personal exemption, how it applies is you just can't take more than a $1,000 exemption monthly. And that's on all sources of UST or all sources of UST. The other thing is, the reality is use tax is not due until the subsequent month. So even if, for example, a shipment comes in, a form UST is completed, and then that UST form is, that UST form gets transmitted to the Department of Revenue and Taxation, it's possible, and there is nothing that prevents that individual from taking the shipment and not paying the tax at the point the point that the product is received, because the law allows for the payments to be done, made through the 20th of the next month, similar to the BPT law. And actually, thank you, Senator Perez, because really the UST and the BPT, if you'll take note, usually when the BPT was 4%, the UST was 4%, and again, when the BPT was adjusted, that UST was not adjusted. And so, although they are separate, I believe that there is some relationship to the, there is some parity that was trying to be made by the legislative body at the time those laws were enacted, because, BPT we know is on those items that are for resale, and then the 4% UST is assessed on those that are just for use and not for resale.
Okay. All right, thank you for that.
And also, ma'am, to go back to the Inflation Reduction Act, just to clarify, I was able to just do a little bit more research here. Likely that will not apply to, it is really for large corporations and large by probably like national US standards, and so likely it will have little to no impact based on kind of just my real quick read on what it would apply to in terms of the threshold for income.
So it's, we did pass laws, a law that improved manifest reporting. And has that had any effect on the collection of use tax?
I'm sorry, Senator Perez, I'm not familiar with that law.
Yes, so it was actually introduced by Senator Torres. And it basically would, before the law was passed, we would have to wait I believe 4 or 5 days after the shipment arrived, but now it requires that when it leaves its destination, they have to send a manifest. Has that been implemented, or what's the effect of that?
I'm sorry, Senator Perez. On the revenue tax side, what we receive is we receive the forms UST from Customs and Quarantine after the shipments are received. So I'm not sure what Customs and Quarantine might receive ahead of time when that shipment is coming in. We get the documents from Customs and Quarantine after they've already delivered the product and either received or didn't receive the payment. I'm not sure how that manifest document might be affecting the collections.
Okay. Okay, so that needs to be looked into, because they should be getting the manifest before arrival, before delivery. Okay, the other thing is, it's my understanding that there are, I believe, automation, there's going to be connectivity between ports. Do you understand where the progress is with that?
I'm sorry, Senator Perez, I don't have any answers for that. I don't know.
Okay. All right, this question is for BBMR. So in regards to the Section 30 funds, and how in previous years they were taking a percentage off to pay for war claims, what was that amount? Or maybe this question's for Director Byrne.
Senator, in total it was about 38.4 million.
38.4 million for
in total,
cumulatively?
Yes.
Okay, and I believe there was an amount every year, though. Is that correct?
Yes. But it wasn't the same amount.
It wasn't the same amount,
No.
okay. Was it roughly the same, average, or was it, how did they base that number?
I actually don't know. It did vary, and I don't know how they calculated it. Maybe Mr. Carlson does.
But when they were taking, so they never gave you how much they were going to take off? You never got
No,
that report?
they didn't. So what happened was when Speaker Cruz was the chair of OFB, we read the war claims to read that the floor we would receive would be $68 million. So we budgeted $68 million. And then one year, the remittance was like 65. So they took out, I think, $14 million in that one fiscal year alone. We did not believe that our interpretation of what was going to be done was adhered to, but nevertheless, they took what they wanted to take in that one year. And we have been very careful about that, and we've been trying to get some kind of information as to what, if any, reconciliation or war claims would be adversely impacted by the Section 30 remittances. And it's not been the most pleasant relationship, only because we put in a number, and if there's a reconciliation on top of a deduction for war claims, then it's a double whammy. So the good news, again, Senator Perez, if I could accentuate the positive, is that we're done with any of that debits from Section 30. We have official correspondence stating that, and I forwarded to OFB the letter that the governor signed July 29th, asking for $80,197,000, subject to, of course, any reconciliation, but we know that there's not going to be any war claims.
Okay, so what you're saying is that that number could be up to 80 million for the Section 30, is that what you're saying?
It could be, but until they actually respond to her request, we don't know.
Okay. So you don't have any kind of report about how much, let's say, I know they sent out papers to, saying that awards, basically, right? They sent out awards. You don't have an accounting of what's left to be awarded, what hasn't been basically implemented?
Are you talking about for war claims?
Yes, yeah.
The statement that we got, it clearly stated that there will be no more claims adjudicated.
Correct, but as far as, I understand that, but as far as payments go, is there an outstanding amount that needs to be given out? Because yes, they were adjudicated to receive, but are there still pending money?
They have
disbursement
sufficient
money?
funds to make any claims that they've adjudicated. That was the message.
But what I'm trying to get at is, so you're requesting 80 million minus whatever
No.
they're going to pay out?
I don't anticipate any, Director Shimizu concurred that we don't know of any outstanding reconciliation for Section 30 that would adversely affect that number. But again, they don't tell us this stuff like a month out. They tell us when we make the request and when they calculate what it is they actually remit to us. And then we know.
Senator, my understanding is that when the Foreign Claims Settlement Commission adjudicates a claim, it gets paid out pretty quickly. So if the Settlement Commission has ceased adjudicating claims, there isn't a big backlog of claims for Treasury to pay out.
We're under the assumption that it gets paid out right away.
Well, that's my observation from when we were in the middle of all this 2 years ago.
Okay. So potentially this number could be increased to 80 million, Section 30,
Potentially.
potentially, okay. All right. Let's see, one more, hold on.
And potentially the use tax can go to 4.5.
So, so the next page, page 4 of the presentation, just maybe for clarification, this is for Director Shimizu. I know it was asked by previous speaker, the speaker, in regards to set aside for the income tax refunds. So historically, how much have we been paying, and has that changed significantly or fluctuated significantly?
So with regards to how much we've been paying for refunds, I can say on average for years 2015 to 2019 fiscal years, we paid out about $144 million, and that's on average. And that's from 2015 to 2019. Of course, that's pre-COVID. We got to 2020, fiscal year 2020, and that number significantly dropped. Of course, it was during COVID time. There was a change in the due date of for income taxes in that year. There was a large amount of payments that were made in 2021. So in 2021 and 2022, we did see that there was quite an increase, and of course, you can see that reflected here in the OFB levels. The $175 million is approximately how much we paid so far in 2022. And so, again, on average, pre-COVID, we were paying about $145, which again is the usual amount that I think that the provision, at least the gross provision amount that we've seen in prior budgets.
Can you repeat what was the amount for 2020 and 2021?
For 2020, for fiscal year 2020, I have $105 million approximately.
Wait, did you say 185?
105.
Or 105?
For fiscal year 2021, I have $238 million.
Wow.
And for fiscal year 2022, as of the beginning of August, it's about $172 million. But please take note that for fiscal years 2021 and 2022, the reason for the significant increases were for 2021, we had EIP 1 and 2, and if you did not receive EIP 1 and 2 in your, as an advance, you were able to take those credits on your tax return. And so we saw that, that impact the amount of our refunds. And then in 2022, we see an increase, or we see a larger than usual amount because of a few things. Again, there's the rebate recovery credit for EIP 3. There's the increase in the child tax credit from $2,000 to $3,000 or $3,600. And so, there were some anomalies. And so, as I was looking back, though, in terms of the amounts that we've been paying out and trying to come up with averages. So the average refund, if we want to talk about, so historically, again, the provision, I believe, has been $125 million, which is the 145, minus the ACTC that we've been reimbursed, which is approximately 20 million. So, and that's how we come up with the 125. So 145 gross minus the 20 million, that is, of course, what we've been historically reimbursed for, which is the additional child tax credit, and we've received that regularly for the past several years to get to 125. So that 125, and again, I'm going back and looking at averages. When I look at the average refund minus the ACTC for years 2019 to 2021, I come up with a little bit over 130 million. When I look at the average just for the last 2 years, which is fiscal year 2020 and 2021, I come up with a little higher, which is 138 million. So again, the reason why we're seeing that large amount, the 175, is really because it's, again, it's the anomalies. It's the ARP Act because of EIP 3, which we see the RRCs in there. It's the increases in the child tax credit. What I believe that we'll see in the next coming year is really a more normalization of things because, well, for one thing, again, we will not have these same types of the one-offs that we saw because of COVID. You know, there are no significant tax changes that have happened, so we're going to go back to pre-COVID, basically pre-COVID period, where this child tax credit will return back to 2000, and then also, you know, again, so we will not see and we will not have the rebate recovery credits anymore. So that 175 again is reflective of the amount of refunds that we basically have paid out to date, and again, my numbers are just slightly different from OFB's, so I'm not sure what the difference is, but the difference is not material. The 52 million, I believe, is an average, is the average amount that we have paid out for EITC, and again, now we're going to be reimbursed for the EITC. As I mentioned before, we did see a bit of a reduction in the EITC over the last 2 tax years because of the fact that EITC is really a credit that is paid out for earned income. And when we saw employment drop, of course, we saw a drop in the EITC payments. But as we start seeing people come back to work, we should expect that number to increase. And so the 52 million is a reasonable, again, it's an average, and it actually is very close to the averages that I have for the last few years. The child tax credit, the 36 million, and then the respectively the ACTC, again, these numbers are averages, and they're reasonable averages based on our historical experience. So as I mentioned before, I believe that the 62.884 million is a reasonable estimate that should be sufficient to cover our refunds in the next fiscal year.
Okay, so you were saying that you were averaging for 2022 was 138 million for tax refunds?
The average for fiscal years 2020 and 2021 was about, and this is net of the child tax credit, is about 138. What we're seeing now, though, again, we're at $170 some million level, but that includes rebate recovery credits, that includes the increase in the child tax credit. And so and again, you know, these are our best guess estimates as, you know, looking at historical data, trying to pull out what are these one-offs or these anomalies that we're not going to see in this next year. And so, although I can't say that the 62.88 million is exactly what we're going to be able to, or what we're going to pay, I can say that it's definitely a reasonable estimate, and it falls within the range that I believe we'll be paying out for refunds.
Okay, and so, but you're basically projecting a normalization, which would mean bringing it down. Potentially, it might be lower. Is that what you're saying?
I'm saying that with regards to the 170, we've not seen, and I'm looking back all the way back to 2006, we've not seen our refunds exceed, well, except for, since 2013, we've not seen our refunds exceed $149 million. And so I believe, again, you know, kind of looking at the way that, looking at our numbers, I believe that that 62.8 million is a reasonable estimate. And Senator Pierce, you know, there is always a kind of a threshold for, you know, it can be a little bit more, it can be a little bit less, but I believe that this is sufficient.
Okay, all right, I appreciate that. Thank you for listing that. Okay, so question for BBMR. We're going to page 7 of the presentation. So if we look at the Tourist Attraction Fund, can you explain how you arrived at that estimate?
The $13,627,000?
Yes, that's correct.
Again, Senator Perez, the executive budget request was submitted to the legislature in January of this year. We didn't have the knowledge that we have now about the robust return of Korean tourism and, more importantly, the return of Japanese tourists. So that number actually was representative of what we thought we were going to get at the time because of because tourism hadn't returned. So that was a number, and we didn't have any information that would substantiate a higher number. We did have military use of hotel facilities for training, which was very much welcomed. But we didn't believe that, that there was enough information in January to take that number any higher than what it was. That number and the representation from OFB now at $16 million is representative of a return, albeit slower than we would like to see, of tourism. So we're fine.
Okay, so I guess maybe the question I'm asking is, what visitor arrival number did you use to estimate that amount?
I think I just mentioned, I just stated that, Senator.
I didn't hear a number. If you can repeat that.
I didn't give you a number.
Okay, yeah, that's what I wanted to know.
I
That's my question.
don't have a number in front of me, but at the time, Senator, if
Yeah,
you would
no, I
please
understand that.
remember that it was January.
Yeah, my question is, can you give me the number that you used to base this off? Or did you use the visitor arrival number? That's my question, really. It's simple.
Yeah, it's not that simple because we did not have Korean tourists. We didn't have the commitment from United and Japan Airlines to resume flights from Japan.
Yeah,
None of that was
just
here.
a simple question. How did you get that number?
We looked at tourism arrival trends. We consulted with GVB. We consulted with the airport authority. We gave a best guess estimate of what tourism would look like in January, beginning in fiscal year 23.
Okay, same question for OFB. So you have a higher estimate for the amount collected in the Tourist Attraction Fund. Can you explain how you got at that number?
Senator, the figure came from, was in consultation with GVB. In their estimates, they're expecting about 506,000 tourists, and they utilize...
Sorry, I didn't hear that.
506,000?
Oh, they're expecting 506,000 tourists?
Yes.
For the year in the 2023?
Yes. And how they calculated their collections was that this amount represents roughly 30% of 2019 arrivals. So they took about roughly 30-some% of the collections in 2019 to come up with the 16 million.
Okay.
Yes.
All right. Okay, I think those are my questions. Oh, actually, one more. Debt service. There seems to be an increase in debt service. Is that correct?
That's correct, Senator.
By how much from last year?
The total increase, Senator, is about $4 million.
And what does that do to?
Well, from what I know, on the hot bond, on the TAF, that particular bond went up about 1.4 million. Yeah, and that's the limited obligation bond for tax year 2015 series. went up with about 1.4 million.
Okay, so, but you said 4 million more than last year, so what causes the increase? So you mentioned the hot bond.
That's just, if you look at the way Gita puts out the abstract, that's the payment that's on that schedule. We have no control over that. That is already set for the life of the bond.
Is it due to balloon payments?
It just depends how those bonds are negotiated.
All right, can you provide an itemized list of that, or some sort of document that would provide the,
You're talking about the increase?
yeah, the increase?
Yeah, if you have this, if you look at the schedule that we provided you when you came to the OFB, it's on that schedule, the
Sorry,
variance.
Which schedule?
The worksheet that we provided you when you came to OFB for our meeting?
I'll talk to you later.
All right.
Okay, so the Manpower Development Fund actually was projected to be receiving more than 7 million. I believe it was upwards to $12 million. Can you explain why it was decreased to 7 million?
Senator, can you repeat the question again?
Yes, I recall that the tracking for Manpower Development Fund was actually more than 7 million. Can you explain why the reduction to 7 million?
Yes, Senator. Again, this is a conservative approach like we did last year. We took 60% as the conservative number. So while Department of Labor says it can be high as 13 million, they offer the projections at different levels, and we took the 60% for a conservative approach. That's the same approach we took for 2022, and we're hitting those levels as well.
And what are you currently tracking right now for the Manpower Development Fund?
About 1 million.
One
Sorry,
million?
Wrong, sorry. 6.5 million.
All right, thank you for the responses. I'll save them the next round.
Thank you, Senator Paris. Senator Amanda Sheldon.
Thank you very much, Mr. Chair. I'd like to thank the panel for the presentation and the discussion today, and I move to recess until 10 a.m. tomorrow morning.
Thank you. We will recess till tomorrow morning at 10 a.m. Thank you.